Hello there, this is fairbinaryoptions.com and we are continuing our Binary Options Academy. So let's write here the fairbinaryoptions.com. And we are continuing our Binary Options Academy project with a concept that is a bit more difficult, let's say, but it's not that difficult to understand, first of all, if it is clearly explained, and a concept that should be used by traders all the time because it refers to one pattern or to the most common pattern in technical analysis and in trading. I'm talking about contracting triangle being the most common pattern, and the whole concept that I would like to show you here and explain it to you is being called the thrust of the triangle. It is a term, let's say, not that difficult. Thrust, it is being written like this: T-H-R, thrust, and the thrust of the triangle is the tool that confirms the triangle. If that thrust is not coming, then that is not a contracting triangle. It is beautiful because it comes with the measure move. It comes with visible thing to trade, and therefore extremely interesting. Now, first of all, let's try to define this thrust of a contracting triangle. And of course, a contracting triangle, like mentioned, is the most common form of consolidation the market makes. Now, a contracting triangle has 5 legs, no more, no less, no 10, no 6, no 4, no 3, but 5, and they always should be treated with, counted with letters and not with numbers. Now, contracting triangles, as you very well know if you go on the Binary Options Academy projects, contracting triangles can be continuation patterns or reversal patterns. What does it mean, reversal? It means that you have a trend, for example, that comes from the downside, and the market moves like this to the upside, and then forms a contracting triangle, like A, B, C, D, and E, and then moves lower. The contracting triangle is being given by the 5 legs here, so this to be wave A, let's say, this to be the B wave, this to be the C wave to the upside, A, B, C, the D, and the E wave, A, B, C, D, E, and just like that, a contracting triangle travels within the A and C and B to D trend line. So this would be the B to D trend line. And let's make it red. And this would be the A and C trend line, of course. Like this. So this is a contracting triangle. Now, what is the concept of a thrust of a contracting triangle? The thrust of the contracting triangle, or the measured move if you want, represents 75% of the longest leg of the contracting triangle, and that comes with that brings into discussion what kind of a contracting triangle you have, or what kind of a triangle you have. If it is a horizontal triangle like it is this one, wave A is always going to be the longest one. If it is an irregular triangular formation, that means that the B wave is going to be more or bigger than wave A, then that would be the longest, and the 75% should apply to the B wave. So the first task would be to identify the longest leg of a triangle and then to simply measure 75% out of it. You can use the measurement, you can use the Fibonacci retracement here to find the 75%, And by the moment that the 75% is taken, for example in here, this would be the thrust of the triangle. We should take a line from here, 75% approximately. Let's make it blue, and then you take it from there, or you clone it and you put it by the moment that the E wave ends, by the moment that the triangle ends. That is the minimum distance price should go in order for the triangle to be confirmed. If price, for example, you suspect a triangular formation and then price moves to the downside, but it doesn't met the thrust of the triangle or the 75%, then there is no contract in triangle, as it is not confirmed by the market. Stay tuned on the second part, as we'll have a concrete, a clear example on this triangle here formed, and what is the target and how the market reacted, in order for you to understand the whole principle. Thank you very much, and let's move on with the second part.